Hi there, my name is Patrick Oluwadamilare Claudius, and in this pitch deck, I'll be discussing on corporate tax return with my focus on Netflix as the organization in view. Starting from the description or to provide a little background about Netflix. Netflix is actually an American company that was founded in 1997 by Reed Hastings and Mark Randolph. The company started with DVD video rental services during that time, such that it allows members of the public, to visit the company's website and they'll be able to select from the list of titles on the website their preferred video, in which the company then mail it to them with provision for return, usually within 7 days after they watch the video. However, in 2007, the company switched the business model and then allow people to stream their choice video directly from the company's website. They can now stream directly on the internet, and this generated success in the United States, and the company expanded this to Canada by 2010. And currently, as at today, Netflix now exists in over 200 countries in the world with over 200 million subscribers to date. In terms of revenue generated and the company's current worth, Netflix is currently worth Netflix currently has a market cap of $127.61 billion and is currently traded, and share price is $269.06 as at the 3rd of November 2022. Looking at the analysis of Netflix tax return over the years, especially with focus on the last 4 years, right? So in the last 4 years, Netflix has generated about $10.5 billion in revenue before taxes. However, the company has only returned $58 million in this period, with $58 million being the current tax paid on the $5.3 billion generated in 2021. And over the period of 4 years, where the company has generated $10.5 billion, the company has only paid tax of $84 million, which is about 0.8% of the entire tax that was paid. It should be noted that in 2017, under the administration of President Donald Trump, the tax rate was reviewed from 35% down to 21%, which means that over this period of 4 years, Netflix also have paid tax that is around $2.2 billion. Nevertheless, the company has only paid $84 million. So the question is, how was the company able to make this possible without breaking any tax law? Let's find out in the next slide. Right, so we're looking at the strategy to lessen tax liabilities. One of the major ways that organizations across the world, especially in the United States, uses to reduce their tax liability is through research and development. The US as a country is considered as the tax haven in the world, considering the nature of the environment when it comes to research and development. The US government is known to naturally create an enabling environment that promotes research and development, which means that the country allows organizations to fund research and development without having to put them under immense tax pressure. And so what Netflix has done in recent time is that Netflix spent $2.274 billion in 2021, and as at of course, as at the Q3 September to 2022, the company has disbursed expenses of $663 million on research and development. They believe in the US is that when organizations fund research and development, it sort of create job for another set of people in the country, and of course, the investment goes towards several other aspects of the economy. Organizations get to purchase tools, sometimes purchase building where they use offices, where the such research and development is being carried out. And of course, so what the country get to enjoy the benefit of indirect tax through income tax that will be received from those who work in the organizations that carries out the research and development. So it's more like a win-win for the nation on the long run, right? As against when the organization keep the money and um, direct it towards other means that will not allow members of the public to benefit from. So this is a way of encouraging employment in the United States. Another ways the organization uses investment into properties, plant, and equipment. And this is similar to research and development when organizations purchase properties, plant and equipment. In the organizations producing such properties, building those properties, producing plant and equipment get to enjoy patronage in that regards, and the staff working in those companies also they get to get job security, and government on the other hand get to receive uh, income tax from those who work in that kind of organization. So it's still a win-win for the nation as a whole. 37.8%, which amount to 1.32 billion dollars, was what Netflix invested into investment into properties, equipment, and plant in the year 2022, which is a significant rise, which is a significant rise of about 12.1%, which also witnessed a significant rise of about 12.51% this year, because another investment of $1.373 billion was also made towards this particular avenue. Right? And so the reason behind the organizations having to channel resources towards this end is the fact that the US allows organizations to deduct that kind of expenses, allows them, the US allows the deduction of such expenditure um, from what will be paid out in taxes to the government. And so rather than having to pay this amount of money back to government in taxes, organizations sort of channel it towards purchasing plant and equipment or properties that would be used, that may be useful for future purposes, perhaps in the next year production whatsoever that the company intend to do. So such fund is used in that regards, thereby helping the organization to reduce tax liability. Another avenue is investment in bonds and security, which is something that Netflix has been heavily accused of in the US, as the company is known for having presence in several countries in Europe with presence in Malta. So the idea is that the organization hand revenue in so country and then indirectly shift the uh, revenue to another country where it can enjoy in the form of investment, where the company get to enjoy um, tax benefits. So those countries are considered as tax haven, and these include countries like Bahamas, Malta, and all of that. Another avenue that Netflix uses the accelerated depreciation break now. The key factor in accelerated depreciation is the fact that as against um, the normal practice in other countries, right? So the US allows organization to deduct 50% of the depreciation of organization equipment from the second year. Now, which is not the usual practice in other country. Other country, the usual practice that such depreciation is deducted on a gradual, is spread across several years. However, the US allows organizations to take out about 50% right from the second year and then spread the remaining 50% over several other years. And so what, for example, in the year 2022, in the Q3, Netflix was able to get $148 million in tax cuts on account of accelerated depreciation. And it is worthy to note that this is also a legal ways of getting to reduce tax liability for organization. Looking at another option here, which is stock option. Essentially, what organization does with stock option is to give rather than paying cash to top level executive, right? So they give stock option to their top level executive, which may include the CEO and other directors in the company, right? So for example, Netflix CEO received about $33.38 million worth of stock option in 2021 and also received $612 million worth of stock option that was used in 2022. And so the trick behind stock option is this: when organization give out stock option to its executive, the IRS allows the organization to declare the value of the stock when it is being exercised. While the stock is declared on the organization financial statement based on the value it was when it is issued out, based on the current value as at the time the stock is issued out. Now, ultimately, this approach enables the organization to increase its value when it's presenting stock option to the shareholders, while the organization, on the other hand, gets to save money when it's declaring it to the IRS, right? Because it will be declared on the value when the stock is exercised based on the current market value. Another option that is used is tax relief and rebate. So basically, tax relief and rebate is like the amount that organization is meant to deduct from taxes during a particular period, but unable to deduct it because the amount legally allowed has been exceeded. So what happens is that the organization gets to carry it forward and then use it for another tax period in the future. This is something that Netflix has used heavily in the recent time based on the agreement of the US government with other countries regarding double taxation. Netflix take advantage of this to claim tax and even get a rebate for future taxes. And has been enjoying this over quite a long time, which is the same thing that goes with several other organizations, especially the Fortune 500 company. With regards to compliance and risk, so one of the things that Netflix has done is to ensure that to fulfill tax declaration and payment. So whatever rebate whatsoever that is to be deducted in taxes from the organization book, it is expected that all of this is declared and payment is duly recorded. Also, with regards to deduction that can be made on accelerated depreciation, the compliance with the IRS is that only 50% can be deducted from the second year, while the rest is spread. And so if organizations get to deduct beyond this figure, right, this will be running afoul of the law and may attract penalty in this regard. And so looking at the action plans and areas that organizations or Netflix can manage risk, and this is essentially to stay ahead of every tax regulations, especially considering the fact that states across the US now are beginning to have their own tax law. For example, the state of Colorado was recorded to have implemented a tax law that enables the state to charge 2.9% on service streamed on the internet. Also, the state of Chicago has also come up with a new tax requirement, which is about 2.5% on amusement, which is more like when people stream videos on the internet. This is considered by the state as a form of amusement, and it's expected that whoever is doing that get to pay amusement levy of about 2.5%. So all of these are dynamism that comes up in the under tax reform that organizations will need to stay ahead of, such that the company is aware of whatever changes that is coming up and is able to prepare in order not to go against any of those regulation in this regard. So according to the report on TaxWatch website, it shows that Netflix that generated a revenue of 1.2 billion in 2018 from its international operation with the United Kingdom being one of the hotspots. However, tax credit was claimed in the UK during the period in view, despite the fact that the UK government had no issue with this. This report shows that members of the public are beginning to feel uncomfortable with all of these tax breaks, and essentially organizations are expected to be more conscious when they are claiming tax credit, when they are enjoying all of those freebies. They want to make sure that they are not going against certain provision of the law, making sure that they are staying in contact with the IRS regulation on every tax-related reforms, such that they are able to, stay in alignment or in compliance with those regulations and going forward in this regards. So in view of the various tax benefits that the top Fortune 500 companies have enjoyed, in recent times, there has been several allegations from members of the public requesting that the IRS, start um, checking out those companies to make sure they are remitting the required taxes. And so the action plan basically for Netflix is to ensure that it keep monitoring every changes that is taking place in the tax space, so that the organizations can continue to leverage on every available options to reduce tax liability while staying in compliance with those tax regulations. We can conclude from all evidence that Netflix recent years has been able to use quite a lot of opportunities that tax presents to increase organization revenue and to, of course, increase the value of the entire organization while still staying in compliance with those regulatory requirements. And here are the references used to prepare this presentation. Thank you.